All right, Mr. Baskar Babu, who's the Managing Director and Chief Executive Officer of Suryoday Small Finance Bank, is joining in. Thank you so much, Mr. Babu, for taking the time. This is clearly a tough environment that you're operating in, and your bank reported a loss during the first quarter on account of high provisions and also high NPAs. What led to this kind of a performance? What are you seeing on the ground right now?
We had a very good quarter in terms of Jan, Feb, March as the last quarter in terms of business, so which is reflecting in the interest income and consequently the higher operating profit. We saw the momentum dip down during the first quarter of the year, but however, the good news is that the momentum has picked up, and in July, we did disposal of 360 crores, which was almost the same that we did for the entire quarter in Q1. The momentum sustains. Even in the collections front, we have seen an improvement in June over May, and in July substantially over what we could see collection momentum in the month of June. So we see the momentum continuing going through the month of August, and we believe that this momentum will sustain barring any unforeseen substantial impact of COVID-3 if at all if it ever happens.
All right, now you've seen collection efficiency improving in July and the business is apparently recovering, but talk to us more about the efficiency trends that you're seeing across the MFI and other segments, and what kind of NPAs would you expect going forward?
Distinguish in the segment that we are operating in predominantly, which is the inclusive finance segment, to distinguish between circumstantial default and intentional default. As long as the event has happened substantially because of the circumstantial delays or default, eventually we are confident that the credit losses will not be very high. However, as a precaution and on a conservative basis, prudent basis, we have made technical write-off of approximately 1178 crores, but not truly a reflection that they are credit losses. But the most important thing is to keep in touch with the customer. As things are opening up, we see about 10% increase in collections, and the momentum will likely continue. So considering that these are unsecured short-term loans, as long as the customer is paying, even if they will be tagged as NPA because they touched 90 plus and they have not come back to current, they continue to be paying. Around closer to 70% of our delinquent customers are paying customers, in the sense they paid at least one installment either in the month of May or in the month of June. So there could be delays, but the delays, unlike in other products, will not eventually lead to a credit loss as long as there is a contact with the customer and customer is exhibiting behavior of paying installments periodically. So we believe that this plays out across the industry. Specifically, we see the trend for us as well.
Mr. Babu, what kind of provisioning do you think you still have to make as far as NPAs are concerned? And also, could you give us a guidance as to the credit cost that you're expecting in the current financial year?
I think we broadly for now, we believe that we have seen the worst in terms of GNPA. So at the momentum, the focus would be in terms of collecting back what has already gone into GNPA, as long as they are paying par, as we call it. That is, a customer probably are in NPA bucket, but have kind of not continued to pay. So ability to get in touch with the system, with the customers, and customers are also coming back and springing back into the business, and which would really reflect in terms of increased repayments, as a customer would like to have good access to credit and maintain a good track record. So we believe that as of now, we have seen the worst, and the worst is looking like behind us.
Now, Mr. Babu, some lenders have been cautious. They've been a little bit wary of expanding their growth, their books aggressively. What kind of approach are you taking as far as lending is concerned?
In the states we operate in, while we saw an increased stress in the state of Maharashtra, it kind of stabilized and it kind of coming down. Specifically in cities like Mumbai and Pune, where the impact was very severe, as things are opening up and train services are going to open up in Bombay shortly, the people who are vaccinated with both the jabs. We believe that the momentum on repayment will increase. We are not really defocusing on any state at this point of time. We are not into any geographical state where there are external disturbances, so to say. So it's purely because of the events that unfolded. Some states have got more impacted than a few, but when the recovery happens, it's going to be probably faster in states which have got more impacted, which is reflecting in other economic indicators in the respective states.